In today's show, over 50% of Bitcoin addresses are still in profit. Bottom is in when derivative market is shorting Bitcoin into the dirt after the brunt of the spot selling has taken place. Getting closer, and he also shares here, Bitcoin is below the 200-week moving average for the fourth time in history. And quoting Max Kaiser, anything under $100,000 is a gift. That's right, and this just in, breaking news, newly elected Colombian president supports Bitcoin, quoting him here, and removes power from the banks. Also in today's show, Bitcoin dead Google searches hits a new all-time high, as CZ, the Binance CEO, shares here. Historically speaking, if you bought Bitcoin, every time there's a Bitcoin is dead headlines, you would have done well. Logic, when they lose hope, that's when the bottom is in. Also in today's show, ProShares will launch ETF aimed at shorting Bitcoin following the dip under $20,000. And as on-chain analyst Will Clemente shares here, so there is now a short Bitcoin ETF, a futures ETF, a closed-end fund trading at a 30% discount, a 401 option for Bitcoin, but no spot ETF. It is clear that Gary Gensler and the SEC have an agenda against Bitcoin. And as Preston Pish shares, the big boys really want some cheap spot coin. Get your Bitcoin off the exchanges and get your cash ready. Gary Gensler, you're an absolute parasite, sellout that cares more about Goldman types before the American citizens. Also in today's show, Bitcoin stock to flow model gives a false sense of certainty, says Vitalik Buterin, quoting him here, stock to flow is really not looking good now. I know it is impolite to gloat and all of that, but I think financial models that give people a false sense of certainty and predestination that a number will go up are harmful and deserve all the mockery that they get. And Plan B responded, after a crash, some people are looking for scapegoats for their failed projects or wrong investment decisions. Not only newbies, but leaders fall victim to blaming others and playing the victim. Remember, those who blame others and those who stand strong after a crash. Also in today's show, Analyst, who saw the 2022 Bitcoin crash coming, updates his Bitcoin and Ethereum forecast and issues a fresh alert for crypto traders. Quoting Crypto Capo here, the $30,000 support was very similar to the $6,000 support in 2018. Once it broke, capitulation phase started. But if we compare both, we can clearly see that it's not over yet. Funding rates also validate this. Just checked a lot of the charts, and yeah, everything still looks bearish to me, expecting new lows this week. Clear flat structure on the entire market, ready for the nuke. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. The goal is to get to 100,000 subs. If you like getting at crypto, be sure to smash that subscribe button, that's right, and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And I just recently launched Crypto News Alert Shorts, so be sure to check out the new Shorts video released here on the channel every day. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. How's it going, crypto fam? More than half of the Bitcoin addresses are still in profit, raising questions about the severity of the current bear market. Data from on-chain analytics firm Glassnode confirms that as of June 20th, 56.2% of addresses were still worth more in United States dollar terms than when their coins entered them. Now, profitability fails to match the previous market bottoms. A Bitcoin price fell to 19-month lows of 17,600 over the weekend as analysts brace for what they assume will turn out to be a retracement of up to 84.5% from all-time highs, which we witnessed back in November of last year at around that $69,000 mark. Now, a sense of confusion reigns this year thanks to those highs not being high enough compared with historical bull market tops. The subsequent drawdown has thus taken many by surprise, despite so far not matching previous bear markets. That's right, we're in a new territory, never witnessed before. Now, Glassnode figures support that idea. Bitcoin price bottoms have tended to coincide with less than half of addresses remaining in profit, and as such, the current downtrend still has a way to go if it is to fit with its historical patterns. I also like to remind everyone, history doesn't necessarily repeat, but it often rhymes. In March of 2020, for instance, profitable addresses dropped to 41%, which was right after the COVID crash. And before that, the 2018 bear market also saw a drop below the 50% mark, which you can see here on your screen, brought to you by Glassnode Analytics. However, do keep in mind that panic has been setting in as realized losses have been mounting amongst hodlers too, uneasy about babysitting their funds any longer. And on June 13th, we saw the largest on-chain realized losses in Bitcoin history, these hitting $4.76 billion in a single 24-hour period, which you can see here in this Bitcoin realized losses chart. Now, on the topic how much selling needs to take place before the market reverses, we have on-chain analyst Dylan LeClaire, a senior analyst at UTXO Management. eyed a split between retail and derivative traders. In times gone by, he argued this week, retail has sold first and speculators come in to finish the process by shorting Bitcoin to unnaturally low levels. As he points out here, bottom is in when derivative market is shorting Bitcoin into the dirt after the brunt of the spot selling has taken place. Getting closer. Ultimately, I don't think markets bottom until more ETH/BTC collateralized debt is wiped out in DeFi land. Transparent liquidations are too lucrative of a target. Just my opinion. Could be wrong, could be right. Who knows? And as he points out here, Bitcoin is below its 200-week moving average for the fourth time in history. That's right, since Bitcoin's 13-year inception, we've only fell below the 200-week moving average 4 times in its entire lifespan. So this is history in the making. And quoting Max Kaiser, anything under $100,000 per Bitcoin is a gift. Touche. I agree 100%. And quoting Max again here, Bitcoin came from the future to save us. That's right, Bitcoin is God hacking humanity. And he also recently tweeted, keep in mind, Bitcoin is conscious and wants to wreck the entire legacy system. This means it intentionally drops 70 to 80% occasionally to speed insanity and destruction. But don't get fooled. The inviolable trajectory is to $1 million plus. Nothing of the legacy system will remain. And this just in, breaking news, newly elected Colombian president supports Bitcoin, quoting him here, it removes power from the banks. Preach. And before I break down next way of the day, Bitcoin dead Google searches hits a new all-time high. But first, let's take a quick look at the overall crypto market. As you can see, Bitcoin and all the major cryptos are currently pumping. Back in the green, we have Bitcoin up 2.5% for the day, maintaining just above $21,000. Ether up 1.5%, trading at about 1,150. We have Binance Coin, Solana, Polkadot, Cardano, and Doge all pumping and in the green. But all right, now let's break down our next way of the day. Collapsing Bitcoin prices are reviving renewed speculation about the demise of the leading crypto, according to Google search trends. Now, Google searches for Bitcoin dead spiked in the weeks ending on Friday, June 18th, and likely reached the highest level on record. Google Trends tracks interest in search terms over time, assigning scores of 1 to 100 based on the total number of user queries. And as Alex Kruger shares here, Google searches for Bitcoin dead hits all-time highs over the weekend. Now, Bitcoin dead achieved a score of 100 for the period between June 12th to the 18th, based on preliminary data that is reflected by the dotted line. Now, check this out. The last time the search query scored a 100 was in December of 2017 or thereabouts. And if you recall, that was when the Bitcoin price surged to a new all-time high of almost $20,000. Now, the Google search results reflects peak anxiety for the crypto markets following weeks of relentless sell-offs in asset prices. Bitcoin's downward spiral, now in its 7th month, may have been triggered by the Federal Reserve's massive shift in policy, which has placed downward pressure on risk assets. The implosion of Terra/Luna and its related contagion effects have also been a contributing factor, as well as adverse market conditions, which also led to credible speculation that major industry players such as Celsius and Three Arrows Capital are facing insolvency. Meanwhile, mainstream media outlets have written hundreds of Bitcoin obituaries over the years. Their pundits have been cheering the latest market collapse as evidence that the king crypto is not a viable asset. However, Bitcoin supposedly died 45 times again last year alone in 2021, a year in which the digital asset reached multiple record highs. That's right, we achieved the all-time high of 69,000 last year in November of 2021. And as CZ, the Binance CEO, points out here, historically speaking, if you bought Bitcoin every time there's Bitcoin dead headlines, you would have done well. Logic, when they lose hope, that's when the bottom is in. NFA, not recommending this or any strategy for the future. And before I break down next way of the day, ProShares will launch ETF aimed at shorting Bitcoin following the dip under $20,000. But first, let's take a quick look at the overall crypto market cap, sitting just above $922 billion with $73 billion in volume in the past 24 hours. The current Bitcoin dominance is 43.5%, with the Ether dominance at 15% even. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have Celsius, believe it or not, up almost 300% for the week and 52% for the day, trading at $1.28, followed by Compound up 21%, trading at $41, followed by Zilliqa up 17%, trading just above 4 cents. And checking out the top 100 cryptocurrency gainers for the past week, you can see SNX up over 70.9%, Elron up 34.9%, and Basic Attention Token up 40.5%. And checking out one of my favorite indicators is the Crypto Greed and Fear Index, shows we are currently rated a 9 in extreme fear, the same as yesterday and last week, and last month was a 14 in extreme fear. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That could be a great buying opportunity, like we're witnessing right now. BTFD, buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. But all right, now let's break down our next story of the day. The firm behind one of the first Bitcoin futures link exchange-traded funds in the United States will give investors a new vehicle to bet against the price of the cryptocurrency. In a Monday announcement, exchange-traded fund issuer ProShares said its short Bitcoin strategy ETF would be available for trading on the New York Stock Exchange starting Tuesday under the ticker BITI. The vehicle will allow U.S. investors to bet against Bitcoin using future contracts, given the crypto's performance in a single day as measured by the Chicago Mercantile Exchange Bitcoin Futures Index. Now, BITI affords investors who believe that the price of Bitcoin will drop with an opportunity to potentially profit or to hedge their cryptocurrency holdings, said ProShares CEO Michael Sapir. BITI enables investors to conveniently obtain short exposure to Bitcoin through buying an ETF into a traditional brokerage account. Now, the launch of the investment vehicle will come amid a bear market for major cryptos, including Bitcoin and Ethereum. On Saturday, the Bitcoin price dropped to $17,600 for the first time since 2020 and has since returned to more than $20,000 at the time of this recording. In fact, we're just above $21,000, while the ETH price experienced a similar drop to under $1,000 on June 18th to hit an 18-month low. And quoting Eric Balchunas, the first ever short Bitcoin ETF in the U.S. begins trading on Tuesday, which is today. ProShares wins the race again. They whiffed on ticker, though. It is BITIZ. Should have been NGMI or FUD or something. Now, in 2021, ProShares launched its Bitcoin strategy ETF on the New York Stock Exchange, offering the first of investment vehicles offering exposure to the King Crypto futures in the United States. And opening at $40 a share on October 18th, shares of the ETF have fallen more than 68% to reach $12.72 at the time of this recording. And in addition to BITI, ProShares affiliated company ProFunds announced it'll be launching a mutual fund vehicle aimed at shorting the Bitcoin price under the ticker BITIX. And as we all know, investors currently don't have access to a spot Bitcoin ETF in the United States due to the SEC seeming reluctance to approve an investment vehicle with direct exposure to the cryptocurrency. However, the regulatory body approved ETFs linked to the Bitcoin futures starting in 2021, including those from ProShares and Valkyrie. And quoting William Clemente, the on-chain analyst here, so there is now a short Bitcoin ETF, a futures ETF, a closed-end fund trading at a 30% discount, a 401k option for Bitcoin, but no spot ETF. It is clear that Gary Gensler and the SEC have an agenda against Bitcoin. And Preston Pish chimed in, the big boys really want some cheap spot coin. Get your Bitcoin off the exchanges and get your cash ready. Gary Gensler, you're an absolute parasite sellout that cares more about Goldman Sachs before the American citizens. And he tags Senator Cynthia Lummis and Gillibrand and says to investigate. Now, I agree 100% with William Clemente and Preston Pish that a spot Bitcoin ETF is time to be approved in the United States. Enough with the futures ETFs, which just leads to more manipulation. And before I break down our final stories of the day, Bitcoin stock to flow model gives false sense of certainty, says Vitalik Buterin, as well as the analyst who saw the 2022 Bitcoin crash coming, updates his Bitcoin and Ethereum forecast, and issues a fresh alert for crypto traders. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 1,200 plus videos right here on my YouTube channel. Also, some very helpful resources for you to plug into, including my crypto merch store live at merch.cryptonewsalerts.net. Also, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, just like this, and help support us with the YouTube algorithm. And of course, you can follow me on all the major podcasting platforms, from Spotify, home of the Joe Rogan Experience, to Apple's iTunes and Google Play. We're currently receiving over 500,000 downloads per month, and my goal is to scale that to 1 million downloads per month. And I know with your support, we can do it. And of course, you can follow me on all the social media platforms, from crypto Twitter, Facebook, Telegram, and TikTok. So wherever you're at, be sure to plug in and follow me there. But all right, now let's break down our next story of the day. Ethereum co-founder Vitalik Buterin has criticized the controversial Bitcoin stock to flow model popularized by pseudonymous Dutch institutional investor known as Plan B. Now, the Bitcoin stock to flow model gained a lot of attention during the bull run as it got several price predictions correct. However, the model did deviate on a number of occasions during the bull market as well. Buterin joined on a growing list of critics to the model that aims to predict The price of Bitcoin, here's how it all started on crypto Twitter. This person wrote, the stock to flow model is such an epic failure that Plan B should just delete his account. He won't though, because he sadly still has 1.8 million followers who eat up all of his hopium garbage on a daily basis. And that's when Vitalik chimed in right here. Stock to flow is really not looking good now. I know it is impolite to gloat and all of that, but I think financial models that give people a false sense of certainty and predestination that number will go up are harmful and deserve all the mockery that they get. And Buterin continues, remember who supported stock to flow and who mocked it, even back when it looked like it was accurately describing the trend line. Now, the stock to flow model quantifies an asset's price based on its scarcity and was primarily used for popular metals such as gold and silver. Plan B's popularized Bitcoin stock to flow model suggests the Bitcoin price will continue a steady and impressive path upwards with ultimately tenfold returns every 4 years. Now, the critical problem with the stock to flow model is that many critics have pointed out its one-sided estimation, where it only takes into account the supply side of Bitcoin while assuming that demand will continue to grow. While Bitcoin demand has shown significant growth, other factors such as inflation, aided by the Fed's money printing spree, have significantly affected the buying power of consumers. Thus, the stock to flow model doesn't take into account several macroeconomic factors that mostly affect the market sentiments. Quoting Plan B here, correct, the model only accounts for scarcity / stock to flow ratio. That is the only model input. All of the rest, demand, macro, crypto, COVID, war, etc., causes deviation. The model is very rough. Also, current extreme macro backdrop causes all metrics to show extreme values. And Plan B responds to Buterin's criticism, claiming people are looking for scapegoats for their failed projects or wrong investment decisions. As he shares here, after a crash, some people are looking for scapegoats for their failed projects or wrong investment decisions. Not only newbies, but leaders fall victim to blaming others and playing the victim. Remember, those who blame others and those who stand strong after a crash. So according to the stock to flow model, Bitcoin was slated to touch the $100,000 mark by the end of December of 2021, while he had admitted in the past that there have been certain flaws driven by external factors. The popularity of the model during the peak bull run pushed down most criticism, and Bob Lucas responded, you are 100% correct on self-responsibility, but it is very harmful and irresponsible to peddle a narrative of must be or present it like a guarantee to such a large and experienced audience. That is his point. And Plan B responded, please show me where in my article I talk about a guarantee that must be. Also in interviews and where possible in tweets, I always state it is my opinion and models are always wrong. I never told people to invest or when, what, how much to invest. And checking out this throwback tweet from Plan B back on September 3rd of 2019, we will know by the end of 2021, stock to flow predicts Bitcoin has been over 50,000, even 100,000 if you use the new model, where Dave's model is below 30,000. Also, Dave predicts the next top at $81,000, where stock to flow points to a 3x multiple of $50,000 to $100,000. I also like to point out that the stock to flow model is still predicting a $100,000 plus Bitcoin price post 2024 halving. Let me know if you agree or disagree with the stock to flow model. But all right, now let's break down our final story of the day. A popular crypto strategist who had accurately sounded the alarm on crashing crypto prices this year is now updating his forecast for the top 2 digital assets. The pseudonymous crypto trader known as Crypto Capo says Bitcoin has been experiencing a pattern of support / resistance flips, where the previous support low becomes the next ceiling, a resistance. He tells his 392,000 Twitter followers that investors repeatedly fool themselves into believing that a brief rally means that Bitcoin has reached a cycle bottom. Quoting the analyst here, small bounce without any bullish sign, and people screaming bottom, same story over and over. And next, the trader warns of a bull trap while providing a chart that highlights the divergence between a rising Bitcoin price and sinking open margin contract interest. Bull traps lure investors into believing that an extended rally has begun, when in fact the price might soon flash negative again. As he shares here, do not fall into the trap. Capo follows up on his bull trap hypothesis by saying Bitcoin is only going up because investors are liquidating their altcoin holdings and investing into Bitcoin to eventually sell for cash. As he shares here, bull trap, altcoins moving to Bitcoin to sell later, bottom is not in yet. And yesterday he shared here, $31,000 to $32,000 was broken and used as resistance. Same is happening with $20,000 to $21,000. Main target $16,000 to $17,000, especially $16,000 to $16,250. And he updated us here this morning. The $30,000 support was very similar to the $6,000 support in 2018. Once it broke, capitulation phase started. But if we compare both, we can clearly see it's not over yet. Funding rates also validate this. And he also recently shared, just checked a lot of the charts, and yeah, everything still looks bearish to me, expecting new lows this week. And he concludes here, clear flat structure corrective on the entire market, ready for the nuke. When it comes to the leading smart contract platform Ethereum, the pseudonymous trader notes that his $983 and $1,223 target area has been reached before plotting out a new support level under $800. Quoting the analyst here, ETH main target reach, bounced from there but no bottom formation yet. Eyes on $700 to $800 as new support zone, which would complete the fifth of the fifth wave. Now for the top 3 comments from yesterday's episode. Infinite Legacy wrote, JV got me really aware of the state of Bitcoin. If we hit $10,000 Bitcoin, it will clear out the loose hands and strengthen the diamond hands. I will sell everything tangible, including the shirt off my back, and get the opportunity later when we hit 6 figures per Bitcoin to show off my diamond-made gloves. Your cash is useless until you stack them sats. Bitcoin long hauler, let's go. Sounds like you know a great opportunity when it presents itself. $10,000 Bitcoin, stack sats all day. Anything under 20,000 is a steal, in my opinion. Let's get it. And our next featured comment comes from Stephen French. Good evening, JV. Let the bounce back begin. My price prediction for 2025 is 200,000 euros per Bitcoin. Then for 2029, the price will be 400,000 euros per Bitcoin. Keep hodling. Diamond hands. Music to my ears, fam. Hodl gang. And our third and final featured comment comes from Magnus Boyson, who wrote, I did some panic buying over the weekend, couldn't help myself, bought 200 million Satoshis. Massive congrats, fam. Keep stacking them sats. And to be featured on tomorrow's episode, drop me a comment right down below.